Well, prescription for profits, that's what Herb Greenberg is calling this stock, as 63.3 million Americans enter the open enrollment period for Medicare this week. You heard that right. Herb is making the case for a stock. Joining us now with the name is Herb Greenberg, senior editor, I should say, of Empire Financial Research and a CNBC contributor. Herb, it's good to see you. You look well. We're glad to
Melissa, it's great to see you
doing well. We're used to you being the contrarian, so this is a little hard to get used to, but you actually like this stock.
Yeah, I've mellowed in my older age a little bit, but I think what really happened was it was out of outrage that I sort of stumbled on this company. And the outrage I had was over Medicare, which open enrollment starts later this week. I was going at it a little earlier, comparing drugs. You're supposed to do the drug plan every year. It's a hassle. Prices always go up. You shift plans. This time I looked and I go, my goodness, what just happened here? How did prices rise by hundreds of dollars? So I started chatting about it on social media, started hearing from some of my friends who said, why aren't you looking at this company, GoodRX? They're a good alternative for your drugs. I thought, hey, I've looked at it. I thought about it. I noticed they'd gone public a while back. Never really thought about it. Then started digging around. And then I noticed that some guys I work with, Enrique Abeda and Gabe Marshank, two former hedge fund guys, they run the Empire Elite Growth newsletter. They'd written about this thing in May, and they're really smart guys with somewhat of a short bias, so they're kind of wired the way I am, and they really like this. And they liked it, and I started going through the concept, and the concept was that it's more of a platform company. You know, it's like a Priceline, like an Airbnb, like a spot, like a Shopify. And it's got so it sort of can go into that bucket as something where you basically can really save a lot of money. I've started to try it already. I'm going to save hundreds of dollars next year by using it. So I think it's pretty interesting. And I think it has good potential. I would say at some point it even has potential. I can't see how this thing remains independent for its entire life.
Herb, it's amazing to see. It's great to have you back on. I think Doug Hirsch was on with Jim Cramer at the end of September. He talked about some of the relationships with pharmacies and Walmart, which I got to believe is important. But is this as easy as just a subscription growth story? Because the sub-growth has been ridiculous if you look at last quarter.
Although their sub-growth isn't really where the revenues are coming from. It's more than not just being, if you look at, they have a subscription growth of a subscription platform, but more of it is just people who download the app and then, get a coupon, as I did today, and then go to the pharmacy, show them a coupon, and bingo, you save $70. So I think it's a mix of things. And remember, these guys make their money by being in cahoots with the PBMs, the pharmacy benefit managers. And they do that by sort of splitting some of the take with them. And they do it by basically, taking out, they take margin out of distribution. So there's really a benefit here. There's competition. I'm surprised there's not more. I should also say, Guy, I sort of stopped when I saw short interest at about 24%. I really tried to figure out what that was. I think much of that's tied to this whole, TAM, the bias, the bearish bias against anything with TAM and margins the way, rather just TAM. So I was looking at this and I can't find a huge negative. I'm sure somebody's going to hit me up on, as you would say, the Twitter with that pretty soon. But I think it's pretty interesting.
24% short interest and good fundamentals. I mean, Herb, it sounds like it sort of checks the boxes in this sort of investing age where meme stocks rule, but people are also looking for interesting stories. Did that cross your mind? I'm just curious.
Well, no, it didn't cross my mind. And I want to say something else here. This is not some short-term deal. I look at Enrique and Gabe, and they see this as a potentially $100 stock at some point, but they're not talking about tomorrow. They're not talking about next quarter. This is a longer-term play. But I think, look, you guys sitting there, you're not 65 years old. You're not on Medicare. And they say that's 30% of their customers. And so you're not playing it the same way. There's also an arrogance on Wall Street. And the arrogance on Wall Street is, who's going to do this just to save a few dollars? It's not really, this is much bigger than that. And it's not just Medicare. It's people with group plans that find they can find something cheaper. I find it odd that I'm sitting here getting worked up about a long, but I also find that there are a lot of ideas out there that the street sometimes just scoffs at. Right. But actually, we've seen they turn out to be pretty decent businesses. And this one seems to be pretty decent based on what I've seen so far and what my colleagues have done a lot of work on and have also seen.
It's going to take a little getting used to hearing you talk positively about a stock, Herb, but we like it. We do like it. So we hope to see you again.
I'll see you later, Mel.
Herb Greenberg. I mentioned meme stocks not to denigrate Herb's pitch on GoodRX, but to just say that maybe certain dynamics are lining up with this trade. I mean, if you like the story already, a high short interest and a potential short squeeze isn't anything to laugh at necessarily, Tim.
No, and by the way, we were just reunited with Herb, and it feels so good.
So I think
you've got to use your 24%. Well, I had to. 24% short interest, I think, is actually a catalyst. If anything, that competitive landscape means this is a company that could be a takeout play, and there's certainly some obvious big boys and girls that could be that player. You look at their second quarter numbers, up 43%. They've got a platform that continues to scale. I fall on the side to say this is actually a company that is showing more growth and is complementary to some of the major players and could actually be someone that is in the line of an acquisition.
Everybody wants to save money on prescription drugs, whose prices are going up and up and up, Karen. So I'm wondering what you think of this one.
I think it's interesting. I mean, like you, I'm sort of, shocked and surprised to hear her chatty in a great mood and wanting, to talk about a long. That's interesting to me. I like the idea of it. I did notice, I think Cigna is a customer. I wonder if they get other big customers like that. That would certainly be a good catalyst as well, if that is true. So I kind of like it.
Well, after hours, the stock is up about 4%. We'll keep tracking the move here.